What's going on, everyone? Good morning. Charlie here. We have filing to talk about out of Cboe, and this is related to option position limits, and it has been approved on an accelerated basis. So what we're looking at here on an introduction is on April 21st, 2021, Cboe Exchange filed with the Securities and Exchange Commission a proposed rule to amend Interpretation and Policy 07 of Exchange Rule 8.3, which is position limits, to increase the position limits for options on the following exchange-traded funds and exchange-traded notes: SPDR Gold Shares, or GLD, iShares iBox Investment Grade Corporate Bond ETF, or LQD, iShares Silver Trust, or SLV, iPath S&P 500 VIX Short-Term Futures ETN, or VXX, ProShares Ultra VIX Short-Term Futures ETF, or UVXY, and then VanEck Vectors Gold Miners ETF GDX. So a little bit of background. On June 17th, 2021, the Commission designated a longer period with which to approve the proposed rule change, disapprove, or institute proceedings to determine whether to approve or disapprove the change. On July 27th, the Exchange submitted Amendment Number 1 to the proposed rule change, which replaced and superseded the proposed rule change as originally filed. On August 5th, 2021, the Commission published notice of Amendment Number 1 and instituted proceedings to determine whether to approve or disapprove the proposed rule change as modified by that amendment. On October 8th, the Exchange submitted Amendment Number 2 to the proposed rule change, which replaced and superseded the proposed rule change as modified by Amendment Number 1. On October 25th, the Exchange submitted Amendment Number 3 to the proposed rule change, and then the Commission is publishing this notice to solicit comment on Amendment Numbers 2 and 3 and is approving the proposed rule change as modified by those amendments number 1, 2, and 3 on an accelerated basis. So basically, currently, position limits for options on ETF traded on the exchange, such as those subject to this proposal, as amended, are determined pursuant to the Exchange Rule 8.3 and generally vary according to the number of outstanding shares and past 6 months trading volume of the underlying security. Options on the securities with the largest numbers of outstanding shares and trading volume have a standard option position limit of 250,000 contracts with adjustments for splits, recaps, etc. on the same side of the market. In addition, Interpretation and Policy .07 of Exchange Rule 8.30 currently sets forth separate position limits for options on certain ETFs that range from 300,000 to 3.6 million contracts. The purpose of the proposed rule change as modified is to amend Interpretation and Policy .07 to Exchange Rule 8.30 to increase the position limits for options on LQD and GDX from 250,000 contracts to 500,000 contracts. The exchange believes that the proposed position limit increase will lead to a more liquid and competitive market environment for these options that will benefit customers interested in trading these products. The exchange states that the current position limits for options on LQD and GDX may have impeded the ability of market makers to make markets on the exchange. According to the exchange, the proposal is designed to encourage liquidity, to provide additional liquidity to the exchange, and other market participants to shift liquidity from over-the-counter markets onto the exchange, which it believes would enhance the process of price discovery conducted on the exchange through increased order flow. The proposal would also benefit market participants, the exchange maintains, by providing them with the ability to more effectively execute their trading and hedging activities. The exchange also represents that the existing surveillance procedures and reporting requirements at the exchange and other self-regulatory organizations are capable of properly identifying disruptive and or manipulative trading activity. Yeah, right. According to the exchange, its surveillance procedures utilize daily monitoring of market activity via automated surveillance techniques to identify unusual activity in both options and the underlying products. So, in essence, they are increasing position limits on LQD and GDX from 250,000 contracts to 500,000 contracts, effectively doubling them. Helps improve price discovery, helps improve liquidity, helps participants implement hedging strategies, bring over-the-counter volume back to the exchange, which is a big one. It will bring volume from over-the-counter markets to the exchange to bring more order flow. And again, don't worry. They're going to make sure that no crime happens, right? Because they're so good at that. Take it easy.